How's it going, everyone? First things first, if all you get to in this week's video is literally right here and you click out, just know that I'm not stopping my dividend investing journey. It will continue to be my main and only investing strategy in the markets, but some things are about to change, and they're actually pretty drastic, so stay tuned as you won't want to miss it, as I'll only be explaining it in this video in depth once. Then we'll continue with the new updated journey. But as always, friends, first, welcome back to Continues to Tick. So friends, how well do you respond to change? Are you adaptable, mindful of opportunities, hesitant, or avoidant? Change is hard. Even positive change is difficult. Personally, I like to believe I like change. I like to continue to preach that our level of comfort should be in discomfort. But truth is, friends, it's hard for me too. But a key to success is realizing that although the change of things in our life is hard, we can't stray away from them. We shouldn't walk the other way. We shouldn't avoid them. Sometimes change is the conflict we place upon ourselves. And well, how many of us like conflict, right? Maybe UFC fighters like Nate Diaz, who just happened to fight this past weekend. Crazy fight if you saw it. Anyone else here watch UFC? But my point to this change, friends, is that oftentimes the opposite of change is stagnation. And like I've said before, stagnation is a silent killer to our life's ambitions. It leads to no growth, just being the same version of ourselves year after year. Well, here I was, friends, contemplating this change, and I finally decided to do it. I thought about it greatly, but in result I see it as a good thing for multiple reasons. Recently, I have just felt the markets do not match the sentiment of the people or the sentiment of what is really going on in people's lives. My dad has lived through multiple market downturns, and a lot of older, wiser people have. And when you speak to them, they just know something isn't in alignment. And that is just also how I happen to feel right now. The news, the morale, the situations, they can be what they are, but it'll always be up to you to decide what to do. But for me, friends, I'll explain it here. The markets and the financial sphere just doesn't align and hasn't felt right for a while. I'm not going to come here and predict a market crash by any means, but these things have played a part in me rethinking my overall strategy, at least for this short term. And I'll just share a few of that here, such as the obvious. We just got through a pandemic, possibly on the other side now, or maybe that's foolish to believe. A point to this though, is no one exactly knows. We do our best to predict. What's the saying? A broken clock is right 2 times a day. But just as that is the sentiment to that, how can we expect the financial sphere to be improving also? No one truly knows the outcome to these things. They do their best to predict. That's why it's always best to be time in the market versus timing the market, they say, which I fully agree with. And for more reasons, we just went through one of the largest housing booms, probably the second I've seen in my lifetime. And the recipe is different, the flavoring may be different to that of 2008, but are we for certain we won't get blindsided from a different angle this time? I don't know. I'm unsure that anyone is fully certain. A truth that I know is that if any of you have frequently watched Zillow, it was moving like the FOMO in the stock market over this last year and more. And if you still watch Zillow, it's finally cooling off slowly now, which for me is a bit concerning. I just can't imagine so many people taking on such new debt still, as they were doing during that time. I've read reasons being the interest rates being low was a large reason, as well as was the pandemic, which I agree with. But now with the interest rates incrementally increasing, pretty quickly it seems, while also wages having gone up to combat inflation, or these increasing prices of food, home goods, or basic life necessities, like utilities. Anyone else notice food portions getting smaller at Trader Joe's for the same price? Or what used to be the 2 for $5 at Burger King is now actually a 2 for $7 with worse options. Am I the only one noticing these things? My point to these things all bundled is I don't feel that there is yet fear in the markets, but I am personally feeling uneasy. So rather than wait to be fearful, I will start being greedy with my cash. I've always been saying I'll be saving up cash, and I never actually do it. It's the one thing I haven't done. It's like I keep saying this to myself and expecting to buy a property of real estate in 3 years. But the reality is, I haven't even started saving. And I said that 2 years ago. I haven't even come close. The truth is, if a house were to plop in my face, a deal of a lifetime, I wouldn't be ready. I want to be ready. So because of this, my plan, friends, is to now officially begin to start saving up cash for real estate aggressively, just like I was aggressively funding my dividend portfolio over the last 2 years. Just this last week, I began to make adjustments, but I finally pulled the trigger on something I've been wanting to do for some time now, but I wouldn't commit to. Now I updated that plan with commitment. So for this plan, it's currently a 3-year plan. I just did 2 years of committed dividend investing, so I'm sure I can do this too. But I plan to save cash for the next 3 years as my priority, while I continue to invest in my dividend portfolio, of course, just at a lesser amount than before, by a significant lesser amount. My plan is to invest now, beginning next week, $100 a week into my dividend portfolio, which equates to about $5,200 a year, plus my current annual dividends, snowballed in, which is approximately $1,788, totaling roughly $7,000 going to the dividend portfolio each year. A lot different than $26,000, I'd say, but I feel like it'll be worth it. And relating to this, I just wanted to say, I'm really thankful for taking the boulder at the start, picking it up, and placing it up here, where I really do get a significant amount of dividends dripping now, which allows me to still invest a great amount. I mean, that's like almost $2,000 extra that I'm personally not even putting in myself. And that is the example right there, why dividend investing is so powerful, the snowball effect. But now, in this same token, friends, because before I would invest all $500 a week into this, and now I'm investing $100. The remaining $400 a week will be placed into my savings account, with the idea to be ready for buying opportunities, should they ever present themselves. I really want to have the cash to pull the trigger on a property. I'm not so much betting that the market will turn down by the time I have a significant amount saved, but I'm at the age where I do want to begin saving aggressively for real estate, so I can begin finally to build up equity in a property and use time to funnel that into additional properties down the road. I also believe by the time I'm ready with the power of cash in hand, markets will also look different. Who knows? But that one's not a guarantee. So that's just more of a secondary benefit that may possibly be there when the time comes. I'll have to see how that portion specifically plays out. But overall, friends, I'm viewing this as not a loss of opportunity. I began a foundational cornerstone with dividend investing. Now I simply want to begin one also with the real estate portfolio. So I gotta get ready. So in short summary, I'm still either investing or saving a total of $500 a week. That amount doesn't change. My priority right now, due to these odd market sentiments and my need to start seriously saving up for real estate, is that I decided to drastically change up my investing strategy to save up cash. And it wasn't easy, friends. It makes me uncomfortable. But I really do have the belief that now that I did a lot of the upfront work for my dividend portfolio, it allows me the opportunity to begin to aggressively save up cash, because I really do have an underlying belief that having liquidity is also very powerful. And besides my stocks in the market, I'm not very liquid at the moment, when I personally feel like I should be. I want to be ready for real estate in the next 3 to 5 years. I don't want to worry about liquidating my stock portfolio in order to buy a property. I want to be ready for when the time comes. But before this video ends, there are still 2 things I want to show you. So first thing, here's my new calculations on the dividend drip calculator. So my current portfolio size, as you'll soon see, is $61,933. And if I contribute $400 a month, with an expected increase of stock price of 7%, which is pretty average, and the years here don't matter so much, but the dividend yield's 3%, and then the expected dividend growth rate is 5%. If you look down here, you can see, by the time I'm 30, in 3 years, I'd have a portfolio the size of $97,771. So now let's take that number And let's say by this time, I already had a significant amount of cash in hand, but let's just say at this point in time, I want to start investing again heavily into my dividend portfolio. Maybe I want to go to $500 a week, which is $2,000 a month. But maybe also I want to make up for lost time. At this point, I anticipate my salary to have also increased, and maybe I'd have more buying power. So maybe I'd be able to afford $600 a week. So let's just say I do $600 a week. That'd be $2,400 a month going into my dividend portfolio. And starting at that $97,000 where we were before, going for 21 years this time because, I want to stop at the age of 50. Still a 7% expected increase of stock price a year. Still the 3% dividend yield with the 5% expected dividend growth rate. If we look at the calculation down below, we would still end up with a $2 million dividend portfolio, which still provides a significant amount of dividends of $41,000 roughly a year. And I would say a big portion or a big reason as to why I feel comfortable making this change right now is because on the back end, as some of you may already know, I do work for the state of California. So because of that, I do have a pension. I have a pension going on in the background this whole entire time. And honestly, the benefit of a pension, it's a defined benefit pension plan. So that's great. But the major benefit of a pension plan is that if I absolutely do nothing at all for my retirement, I still have one going on for me in the background. So everything I do is extra. I never plan to leave the state, throughout my career. Plan to stick there, plan to stay there. There's so much I could do there. But the biggest benefit to that is that no matter what I don't do or what I do, I still have the pension in the background. And I know it's not guaranteed, but it is through CalPERS. So a lot would have to happen for them not to pay us out. And it's a defined benefit pension plan, which means they would have to. And sure, things could change, but it'd be very, very scary if they did. And then the second thing I wanted to show you before we go, which is, as always, the portfolio recap of last week and where we currently stand right now. These will continue to be here for now, but as you see, we currently sit at $61,933.46. And taking a closer look here, you can see the total return percentage is 18.99 with a total portfolio gain of $5,313.97. And looking a little bit closer here, you can see of this, for market gain alone, it's $3,314, and of earned dividends, it's nearly $2,000, or 20 cents short, at $1,999.80. And since we're here, this is the last week's performance. You can see we had a total return of 2.92%, which equated to a portfolio gain of $1,749.69. And now in the section that matters most, I guess we'd say as dividend investors, is the dividend payout activity section. Starting here on September 6th, as you can see this week we have a lot to go through, but starting here, we got paid by Southern Company, $6.38, and then we also got paid by J&J, $10.08, and then we also got paid by Pfizer on the same day, $9.96. Now going to September 7th, we got paid by ADM, $6.60, and then also on the same day, we began to make a little small snowball funnel of $27.65. And then 2 days later, here we were on September 9th, getting paid by $6.63 by ExxonMobil, and then also getting paid by Sherwin-Williams, $1.47. And then we also got paid by Snap-on the same day, $4.76, while also getting paid by Sunoco Products, $4.85. And then we got a pretty significant dividend payout here by Walgreens of $16.48. And then just to remain transparent, so this last week, there's a moment where I was contemplating decreasing my dividend deposit to $400. But next week and for the next few years to go, expect to see $100. And maybe that's also more realistic for a lot of how you guys invest at this present time. So maybe because of that, it might make it a little easier to follow. I know investing $400, $500 every single week is unrealistic for some people because life happens and you have a lot of expenses and maybe you don't live like I live, and frugality sometimes. But as you can see here on the same day, we had our main funnel of $6.63 over the deposit amount. So $27 down here with the $6 up here. We had an over $30 dividend snowball for this past week, and I will take it every single time. And so that's going to be it for this week's video, friends. I just want to say thanks for those that sticked around through these last 2 years of my journey of investing aggressively in my dividend portfolio. We made it quite a distance, and it's going to continue just at a slightly different rate. But the journey continues as we also continue to grow and evolve. Here's to another 3 more, and we'll see how this next phase of this plan plays out. I'd say this first one played out fairly well. As you can see by my chart here, despite any market turbulence, we continue to go up, despite everything that hit our way. The staircase effect remained in effect. But also, apart from this dividend portfolio, hopefully I can soon enough also share with you my real estate portfolio in due time. But as always, just know we've made it through 7 days, and because of that, we have a high chance of making it through another 7. And as always, I will see you then. Good luck, everyone. Good luck to you all out there.